All right, it's 2025 and it's time to make a change. It's time to make a change. If we're looking to purchase that home, this is the year to do it. If you're looking to refinance, let's discuss that. If this is going to be the year where you're going to buy the first investment property, let's discuss it. But you need a pro. Let's go over your strategy. Let's see where you're at. The only way you're going to be able to get there, you got to have a plan. DM me. Let's discuss this. Let me be your coach. Let me be your accountability partner. Let's get the process started now. This is Gary Taylor with Affluent Mortgage and the host of the Mortgage Motivation Podcast. See ya. All right. Welcome to another episode of the Mortgage Motivation Podcast. And I'm your host, Gary Taylor. And we're going to get into it. Today, we're going to go over a few questions, the facts. So FAQs, but I like to call them the facts. A few items that I wanted to address. I put out a poll, I think that was like 2 weeks ago. I wanted to find out what people that are in Delaware, what are they searching? Like what type of mortgage questions do they have about mortgages or real estate? And I have a few that I pointed out. Like there's a few that came up quite a few times. And I want to go over those because I want to make sure that we're answering all the questions that are relative in today's market. If you're watching this today, we're in 2025, January 2025. And if you live here in Delaware, I see you guys have quite a few questions here. So let's get right into it. So question number one, the first thing that came up is what type of mortgage loans are available in Delaware? That's a pretty easy one. I would say just about every state, we all have the same type of loans. The only variances that you're running into is some lenders may not have all the different programs. But to answer the question, you have FHA loans, conventional, you have USDA loans, VA, you have what they call non-QM, non-traditional loans. So like loan products for people that are self-employed or people that may not have the traditional income documents to be able to purchase a house. You may have investors that's looking to purchase real estate property or primary residence, and they're not buying the home in the traditional manner. So we do have those options, but the traditional, which would be conventional, FHA, VA, and USDA loans. Oh, I didn't add in jumbo. Of course, we have jumbo loans as well. The second FAQ is how much down payment do I need? It's funny that this came up because I just did a video about down payment. Actually, I put that on IG. So with conventional loans, you can purchase a property up to 3%. Well, not up to 3%, as low as 3%. So conventional loans, if you're a first-time home buyer, typically you'll see 5%. But just it depends. If you need a Fannie and a Freddie product, that'll allow you to purchase a house at 3%. But traditionally, you'll see 5% as a minimum down payment. And that would be for anyone that's looking to purchase a property, not so much of a first-time home buyer. And there are some income qualifications and different stipulations to those loans as 3%. But normally the 5% loan is what you'll see. FHA is 3.5% down. VA is, you could put a down payment, but it's not mandatory that you use a down payment. So that one is a 100% financing. And the USDA loan, so certain states or certain areas rather will have access to the USDA loan, and that's 100% financing as well. So the two that I want to address are the ones that's 100% financing. So even though we say 100% financing, you still have to cover the closing costs. So even though the down payment isn't mandatory, you still have to cover the closing costs. The third question that came up is, do I qualify for any state-specific programs? It's funny saying that with braces. But yeah, so here in Delaware, we have a program called DSHA. So Delaware State Housing Authority, they have a program. If you see the big billboards that say kiss your landlord goodbye, that is an option for you. We have a few standalone products that's here in Delaware that would give you $500 up to, I believe, like $5,000. And as brokers here at Affluent, we do have lenders that have their own programs that are available. So you can borrow 2% of the sales price, 3.5% of the sales price. And we also have a few that will allow you to borrow up to 5% of the sales price in order for you to qualify for the down payment assistance program. There are qualifications with those. Some you will need to be a first-time home buyers, and there's some you do not need to be a first-time home buyers. There are some that have income qualifications. There are some where the house has to be in a certain demographic. So there are some questions that we need to ask a little further to find out, just to see if you will qualify for those down payment assistance programs. But the bottom line is people want to know, are there programs here in Delaware? And yes, there are. There's a few. But how we operate with those programs is we'll look at your profile and see what you'll qualify for, and we'll only speak on those programs. Okay, so that's one of the benefits there. We don't want to confuse you because there are quite a few different options when it comes to the down payment assistance program. So we'll definitely look at that for you. Moving along, number 4. What credit score do I need for a mortgage? Now, that is a loaded question, and I get that question all the time. Doesn't really matter what state that you're in. So here's what I have to say about that. You can go as low as credit scores in the 500s, right? Especially with the FHA loan, you typically see that. In certain situations, you could go with a VA loan where the credit score could be that. But this is where I differ from a lot of different people that's out there. Ultimately, we're going to try to get you higher credit scores. The reason why is because anytime you're starting a loan process with low credit scores like that, you're going to have a higher rate for sure. Or you may have different stipulations where it's going to require you to put more money down because of the lower credit scores. I always kind of compare it to, and this may be a bad analogy, to like the buy here, pay here car dealership. So yeah, all applications are accepted. But when you do that, you best believe that you're going to put more into that because that's a higher risk type of a loan. So if I was to see that you had a credit scores is like 570, 580, 590, we're going to see if we can find a way to increase your credit scores, because I like credit scores to be above a 640 and above. And going back to the down payment assistance programs, a lot of times you won't even qualify for a down payment assistance program when your credit scores are lower than like a 640. So let's discuss that. I'm speaking in very general terms right now because certain things that we discuss, we have to look a little deeper into those programs. I can do a podcast or episode strictly on credit all by itself. So there's a lot more involved. But to answer your questions, technically there isn't a credit score requirement, but the lenders themselves, they could set their own standards. So certain lenders, they want you to have a 580. Certain lenders, they want you to have a 620. Certain lenders, they're too keen on credit scores, but you will put down a large down payment. So always keep that in mind. So, but to answer your question, yeah, you could be in the 500s, but it depends on what type of loan that we choose for you. But like I said, we'll find a way to increase those credit scores. And with that being said, we're not just guessing at how we can do that. We have what they call a rescore system where I can look at your credit report and it'll tell me exactly what you need to do in order to increase your score if you can. Not everyone can increase their credit score, but we'll run that and see how much you will qualify for. Well, not how much you'll qualify for, but how much we can increase your credit scores. All right, moving along. So the next question is, are property taxes high in Delaware? It's funny that that comes up quite a bit. And I believe it comes up because Delaware is known for the lower property taxes. And if you're not familiar with Delaware, which you should be, it's the first state, but we're right by New Jersey, we're right by Maryland, we're right by PA. We have a nice little cluster that's here in the tri-state area. Um, as soon as you cross the state line, you'll notice that the property taxes are a lot lower than our surrounding states. And that's why you'll see some people that cross over the state line just for our property taxes, especially New Jersey. New Jersey, you guys are wrong for that. But the taxes can be a lot. But when you come across that bridge, we cross the bridge here in Delaware, you'll realize that I still can purchase a large home and pay lower property taxes compared to our surrounding states. Yeah, but to answer that question, Delaware has relatively low property taxes, and that's probably one of the biggest things that's appealing to people that are looking to purchase a property here. And the other thing I would add on to that is you're not paying the sales tax. So when you come here, there's zero sales tax. So when you purchase something, like if you purchase a bottle of water, and I hope I'm not showing the name of that, but if you purchase a bottle of water, whatever you see the sales price is, that's what you pay for. And everything works that way. And that's like one of the things I really love about Delaware that's really appealing to come here. All right, so moving on. Our next question is, how long does the mortgage process take? This is almost for any state that you go to. Usually you'll see between 30 to 45 days. And I say that loosely because it depends on the scenario. So what happens is we have a seller and a buyer that's looking to get on the contract with each other. They decide what's the length of time for that contract to be active. Some sellers need 30 days, some sellers need 45 days, 60 days, up to 90 days. So it depends. But a typical transaction is about 30 days. Can we close it faster than that? Yes, we definitely could do that. Have I seen process that takes maybe 2 weeks? Yes, I've seen that, but not too often with the purchase because it typically takes about 30 days and not with the lending side, because you got to remember there's more than just the loan, not there's more than just the lender that's involved with the process. You have the lender, you have the title company that has a pool of title on that property. You have an appraiser that has to go out there to take a look at that property. So all depends on how quickly these third-party agencies can make their part of the transaction happen. And just to be honest, most buyers need about 30 days to make that transition. And the same thing for the seller, because you may have a seller that's looking to move out of their property. So they still have to pack, they still have to call movers and stuff like that. So it takes time. But to answer the question, typically between 30 to 45 days. So the last question that I have is, can I buy a home if I have bad credit? This is going back to what I was talking about before with the lower credit scores. You typically will see that will go with the FHA loan because they'll allow you to still purchase a home with not being too conservative with the credit scores or the credit report itself. The same thing when it comes to the debt ratios, your debt to income. And if you don't know what a debt to income ratio is, it's basically your income divided by your liabilities that you have on your credit report. That's really important that you understand that when the mortgage company look at your debt ratios, we're referring to your income divided by the liabilities that we see on credit. So we're not counting total liabilities, but strictly what we see on credit. But you can. But go back to my original remark that I made about the lower credit scores or with the 580 credit score. The fact is, you don't want to purchase a home with extremely low credit because, as you know, the rates are in the 6s and 7s right now. And if your credit score is lower, I can almost guarantee your interest rate is going to be a lot higher. How much higher that's going to be, it depends on your scenario because sometimes your debt ratios can offset how low your credit scores are. So that can play a factor. There's a lot of factors that goes into when we look at these loans and the scenarios. So the biggest thing is if you get with a professional, you call me, you call Affluent Mortgage, and you find out what it is that you need to do to increase your credit score so you don't have to worry about the low credit score situation. You could come into this with higher scores, so therefore you could qualify for a lot more because the higher credit scores, the more appealing you would be. And I'm not saying, guys, I'm not saying that you cannot do this, but when we submit these transactions, we want to make sure that you're getting the best deal. That's my job as your broker, is to ensure that you get the best deal, not to come in with the bare minimum, especially if you have time on your hands. So if it's January right now, but you're not looking to purchase your home until May or June, we have time to work on that credit. And I will always emphasize the higher credit scores. So now the higher credit scores, but let's see, can we pay down some debt? Because the better you are financially equipped to purchase this house, when an underwriter looks at your loan, they're not, scrutinizing that loan as hard because you have your credit scores, your debt ratios are lower. When they see that, they look at this as a lower risk. Anytime you're speaking with a lender or looking at an underwriter, with them looking at your loan, you want to come into this process with lower risk. And not only with the way that the lender looks at it, but you yourself, you want to approach this transaction with the best scores. You want to approach this transaction with lower debt ratios because that's going to be a lower risk for you. The better your rate is, the lower your payment is going to be, and that's going to be more money in your pocket. And that's what matters to me. Because think about it, you may be buying a home right now, but what if you looking to purchase an investment property or you're looking to purchase that second home? So every single time you go into these transactions, you got to think long term as well. So what it's going to take for me to get into this transaction right now and what I'm looking to do here in the next 5 years or the next 10 years. So let's think beyond the actual transaction that's in front of you, because I'm going to do that. Those are questions I'm going to ask when I'm talking to you about the VPA. Remember the VPA. So your vision, what your plan is, and the action plan that we have set up for you. So that's still on the vision stage. So what are you looking to do with this property? How long you plan on living in this property? Do you have any inspirations of being an investor? Because we got to make sure everything is done up front the right way. So you're not mad at me. Like, Gary, you put me under this transaction. It's the fact that you had low credit scores. That's the reason why the transaction turned out the way it did. So let's approach these loans and what we do in a way that, like I said, is good for you right now and is going to be good for you in the future. But yeah, so that's all I have for you. There's quite a few other questions that is kind of stuff that I don't hear all the time. So I went with the questions that we get all the time so I can make sure that the majority of you are getting your questions answered. But yeah, if you have any other questions or FAQs about Delaware and what it takes for you to purchase a house, actually write down below in the comments, put that in there, ask a question in there, and I'll make sure that we'll get your question answered for you. That's all I have for you for this episode of the Mortgage Motivation Podcast. And I look forward to 2025. So we're going to make sure this is as exciting as it can be. I'm fired up about this year. I'm going to be placing new videos out every single week to get out to you. I'm going to be looking at interviewing entrepreneurs, of course, real estate agents. I may even get other people that's in the mortgage industry so you can see a full spectrum of what the market has to offer you. But don't let what you hear on social media get you down. Let's make this thing happen. I'm excited for you. You got to get excited for yourself, and let's do it. Thank you for checking out the Mortgage Motivation Podcast. Peace.